What if I told you could save 5% on your next home purchase? I know what you're thinking, that I'm going to go into some long explanation on how I can negotiate a better deal and I'll be a better agent and I'll be able to save you money, blah, blah, blah. But I am here. I'm offering you here practical advice, and we know interest rates are high. And how can I possibly get you a cheaper rate when the whole world is saying otherwise? Stick around, because what I'm going to share isn't just theory. These are practical and applicable strategies. And while they might not work in every situation, they might just be the golden key you need to get into your home for a cheaper rate. Hi, I'm Mark here with the Selling Kelowna Real Estate Group. And before I got into real estate as a realtor, I lent money, over $100 million worth. And today I'm unveiling some secrets that the banks and mortgage lenders don't want you to know about. So grab a pen and paper, because these tips could save you big. And not only on your home's price, but also on the monthly payment. All right, so are you curious? Let's just dive right into it. The top 3 secrets here. Number 1 here is porting your mortgage. Have you ever felt trapped because of the rate increases? Do you hate the idea of letting go on that sweet 2 to 3% interest rate on your old mortgage? Well, what if I told you you could keep your existing mortgage with the exact same terms that you're currently in and use it and transfer it over to purchase another home? It's called porting your mortgage. And here's what you need to know. You definitely want to call your landlord after this video and inquire about the porting options. Find out if there's fees and terms. You'll likely have a 90-day window after your mortgage gets paid out to port it over to your new purchase. There might be some potential fees involved in it, but these fees are probably going to be right around $1,000 and maybe even less depending on it. And if you're aiming to go a little bit bigger, you can utilize your existing mortgage amount. So you still have a mortgage of $500,000 and you need to get a little bit bigger mortgage, say a $700,000 mortgage. You can just increase your mortgage amount, and you're going to pay the $200,000 additional at a higher rate, but you'll be able to keep the bulk of your current mortgage at the current rate where you're currently at. So real estate is all about timing. Real estate is all about timely actions and waiting for the rates to drop. This is just something everybody else is waiting to do. A lot of people are standing on the sidelines waiting for rates to drop to get into the market. But you want to stand out from the crowd and you want to save thousands of dollars at the same time. Sometimes you need to think a little bit different. Remember, these are secrets that the banks would rather you remain oblivious to. So you need to equip yourself with knowledge, and you have to be informed on what steps to take forward and ask different questions that will separate yourself from the other people. The number 2 way you can save money is the assumable mortgage. Do you want to potentially get a better interest rate than what you can currently get on the market, but maybe you don't even currently have a mortgage? So how do you utilize, if you can't port a mortgage over, how do you utilize what the interest rates were 2-4 years ago? Many sellers might be offering an assumable mortgage. So imagine taking over a seller's interest rate of say 2% for the remainder of the term what they have. Every situation is going to be different, but it's definitely a question you want to ask. This question could save you up to 5%, if not more, if you just simply ask, hey, seller, do you guys have an assumable mortgage that I can maybe take over for you? And some sellers might be able to offer it for you. It will actually make it a little bit more easier of a sale for the sellers. We're in a market right now where selling a home isn't as easy as it was a couple years. Everybody is starting to get a lot more creative when they're looking to sell their properties. And the assumable mortgage route is definitely one of the more creative ways we can get around it and benefit the buyer and the seller. Seller gets a home sold, the buyer buys the home that they want, and they get it at a cheaper rate. So they can actually pay a little bit more because they're going to be able to get it at a cheaper rate what money was at a couple years ago. Assumable mortgage, you're going to want to definitely talk to a lawyer and also an accountant about it. Just make sure it's right for you. Definitely not offering any legal advice or accounting advice in this situation. So definitely want to see the pros and cons of taking over and getting into an assumable mortgage. But that is definitely one of the more unique methods what we're seeing right now in the market. And option number 3 is vendor take-back financing. Okay, this is the one where you're probably not going to use it very often. And this is really only for the most skilled people. If you're a seller, you definitely want to make sure you're making an educated decision, taking back a mortgage and knowing the risks associated with it. And as a buyer, you also want to be knowing the risks of taking the vendor take back mortgage. Because oftentimes these vendor take back mortgages, this is a situation where the buyer comes, agrees to purchase the property, and the vendor agrees to mortgage the property. Oftentimes this is going to be very limited in different options, because oftentimes the seller is going to need to have the home free and clear. They're going to have 100% equity in that property, or a great amount of equity in the property. But it could make sense to the home seller to offer a vendor take back mortgage to the potential buyer. And we often see this not necessarily on the normal single family home purchases, but we see it on investment purchases where an investor is trying to take it on a property, and maybe it's a development site, and they have funds tied up elsewhere, and maybe they can't get a mortgage elsewhere because their funds are tied up, and maybe they have a couple applications on the go at the same time. During COVID, we saw that we had 2 or 3 different clients that had multiple applications out there at the same time, and banks will only allow and lend based on having one. So you have to close that first pending application before you can get lending again. So even though you might have a lot of money, you might be able to have, and it might be financially sound and make that purchase, the vendor take back mortgage can sometimes get you out of that situation and get you into a home purchase situation. Drawbacks is it's not going to be as cheap of rates as what you can get on the assumable mortgage or on the vendor or on the porting the mortgage. You're often going to be paying probably market rates, maybe slightly below market rates, but this is a situation that you can benefit for. And you can also benefit maybe on prepayment terms. Maybe you can get interest only payments. Maybe you can get different payment terms to really help you benefit and save you that money and that equity, what you're looking for when you are looking to purchase a home. So definitely when you are looking to purchase a home, you want to ask these 3 questions. If you have an existing mortgage, you want to see if you can port that mortgage over. The second option you want to look at is, can the seller does the seller have an assumable mortgage at a favorable rate? If it's not at a favorable rate, there's no sense really taking it. But definitely ask that question, because that can really save you 5% on your purchase price just alone. And the third thing you want to know is, can I do a vendor take back mortgage? Or do you even want to do it? Do some research ahead of time and see if it's really something you want to do. Talk to your accountant, talk to your lawyer, and then see if vendor take back option is even an applicable option for you in your current circumstance.